Welcome to Middle Class Matters, Business News in English. Um, from Dr. CMA allegation, Hindenburg report on Adani, stock manipulation and accounting fraud. Part number 5 continued. Gautam Adani's brother-in-law, Samir Vora, was allegedly a ringleader of the same diamond trading scam and was accused of repeatedly making false statements to the regulators per the same DRI fraud investigation. He was subsequently promoted to executive director of Adani Australia. Another Adani family member accused of being a ringleader of a diamond trading scam was Samir Vora. According to DRI investigation reports, page 4, Samir Vora is identified in the investigation as the brother-in-law of Adani Group chairman Gautam Adani. One of the witnesses in the case, an Adani company senior vice president, told investigators that Samir Vora oversaw the pricing and import-export of diamonds and precious metals between various front companies. Short-term loans provided to above companies are JAOL, MOL and BPBL that Samir Vora was overall in charge of precious metals and diamonds and taking decisions regarding pricing of gold, gold jewelry and articles, cut and polished diamonds imported and exported by AEL and above said companies that Samir Vora was directly reporting to Sri Rajesh Adani, Samir Shah, that the processing of the cut and polished diamonds imported and exported by above said companies was looked after by Sri Lumesh Shangvi, DRI investigative reports. When questioned about the use of front companies to engage in a circular trading scheme to defraud the government of export credits, a key witness said, Samir Vora looked after the entire business of import-exports of gold and diamonds for all the above said front companies. Samir Vora was alleged to have made multiple inaccurate statements to regulators during the investigation. 11.3.13 that the statement of Mr. Samir Vora to the effect that HEPL was previously a partnership firm which was taken over by Ambitious Trade Link Private Limited and thereafter converted into a limited company was not accurate. Hinduja Exports was prior to 10/9/2004 a partnership firm which was converted into a private limited company on 10/9/2004. Subsequent to such conversion into a private limited company, the same was taken over by the Ambitious Trade Link Private Limited. Source DRI investigative records. Mr. Samir Vora, in his statement dated 2/2/2006, stated that both Hinduja Exports Limited and Aditya Corpex Private Limited were having export house or trading house status and they were entitled to good banking facility in view of their good track record, and the consideration for the takeover was decided keeping this in mind. However, the awareness that Mr. Rakesh Shah was a director in Ambitious Trade Link Private Limited and that Samir Vora was director of Milestone Trade Link Private Limited were factually incorrect. DRI investigative records, page number 124. Typically, when an executive is alleged to have spearheaded a scheme to defraud the government and then provides false testimony about it, that executive is terminated. In some countries, they might even end up in jail. Once again, at the Adani Group, they apparently get promoted. Samir Vora was named Executive Director of Adani Australia from April 2017, according to his LinkedIn profile. In that role, he oversees the company's key Carmichael mine and rail projects. Gautam Adani's elder brother, Vinod, was a group executive also implicated in the diamond and power equipment scams. While Adani now denies Vinod's involvement in the group, outside of being a shareholder, In reality, he operates a vast empire of shell companies that funnel assets through Adani Group companies. Vinod Adani, also known as Vinod Shantilal Shah, in certain company documents held various official executive roles early in the history of Adani Group unit until at least 2011. A pre-IPO prospectus for Adani Power from 2009 detailed that Vinod was director of at least 6 Adani Group companies, a shareholder of Adani Enterprises, and part of the promoter group of Adani Power. He does not appear to hold any current formal positions. Despite his early formal roles, the Adani Group has at times denied Vinod Vora's involvement. As part of the 2014 DRI investigation regarding an INR 39.74 billion, $800 million power generation over invoicing scandal, see Part 5, which covered the period 2009 to 2014, Adani submitted that Vinod Adani was not at all having any involvement in any Adani group of companies except as a shareholder, page 109. Like younger brother Rajesh, Vinod also allegedly played a key role in the INR 6.8 billion, $151 million diamond trading scandal. Indian media describes Vinod as an elusive and enigmatic figure with a vague role in Adani empire. Vinod Adani, elder brother of group chairman Gautam Adani, as per media outlet The Morning Context. 4 years, Vinod Adani has been an elusive figure. Not much is known about him other than a few advertorials. During our investigation, a confidant of Gautam Adani and former director of one of the Adani Group entities told us Vinod Adani continues to be in the Middle East. He takes care of Adani Group's interest in Dubai. That corroborates a November 2022 biography of Gautam Adani that states Vinod Adani does not hold any formal position with the group but remains actively involved with the group, especially when negotiating international finance and connections. In the course of our research, we downloaded and catalogued the full Mauritius corporate registry database and were able to document how Vinod Adani, along with other close associates, have set up dozens of entities in Mauritius that have little to no genuine corporate presence. We also found other entities in Cyprus, the UAE, Singapore, and the Caribbean associated with Vinod Adani, comprising a vast empire of shells. Many of these entities later appear in suspect transactions, often funneling assets into or out of the Adani Group companies. See Part 3. Part 1. Stock parking, offshore funds, shells tied to the Adani Group surreptitiously own stock in Adani listed companies, seemingly in blatant violation of SEBI exchange rules. Indian securities regulator SEBI rule require a minimum public shareholding of 25% to limit insider trading, stock manipulation, and undisclosed margin lending. Publicly listed companies in India are subject to rules that require all promoter holdings, more commonly known internationally as insider holding, to be disclosed. These disclosures are required in order to satisfy Indian rules that publicly listed companies have a float of at least 25% that is not controlled by promoters, that is insiders. The minimum public float rules are intended to ensure a minimum level of liquidity to reduce insider trading and market manipulation and to minimize volatility. Promoter shareholding disclosures also allow investors to determine whether insiders have pledged the shares, an important gauge of the financial strength and or potential solvency risk of insider entities and individuals. Indian market observers have long been aware that Indian promoters may use entities based in Mauritius and other offshore jurisdictions to evade these disclosure requirements and manipulate the share prices of their listed companies. Business Standard, Mauritius, Cayman Islands funds under watch for ownership info gaps. Suspicious over the shareholding patterns in Adani listed companies held by a number of offshore funds has previously attracted questions from the media and Indian politicians, but deep dives into their shareholders have yet to be carried out. We want to know whose money it is. If it is Adani's money, then minority shareholders are being screwed. Indian opposition politician and former investment banker in July 2021. In June 2021, Adani Enterprises stock fell as much as 25%, with other group companies falling between 4 to 8% on the day. Amid media controversy over who the ultimate beneficial owners of a handful of offshore funds heavily invested in Adani stock were, and reports that those trading accounts had been frozen. In outspoken comments to the media at that time, opposition lawmaker Mohua Mitra herself, a former investment banker, said, "We want to know whose money is it. If it is Adani's money, then minority shareholders are being screwed." Below is a simplified overview of the alleged scheme, which appears to involve money being routed out, companies controlled by Adani Group through multiple tax havens and then invested back into listed stocks of Adani Group. Structure of suspected round tripping of cash. Vinod Adani, Adani family, private offshore trust and companies, Adani Group listed companies, Mauritius funds and shell entities. Such a scheme could have critical implications for any investor in Adani listed companies. If the Adani Group secretly controls significant amounts of publicly traded stock without disclosure, the resultant share price of Adani listed companies could be easily manipulated to meet the immediate needs of the Adani Group, that is, to give appearance of liquidity, to help raise money, etc. Please like the video, subscribe to the channel, give your comments, and thanks for watching.